What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner. Today, we're going to go over a couple pieces that I wrote over the last 48 hours on bitcoinandmarkets.com. Go over the charts. We'll go over Bitcoin and some macro charts. Kind of a slower day here over the last 24 hours. Yesterday was all about Gary Gensler in Congress, so we're going to cover that in depth. And like I said, go over the Bitcoin charts. It looked like it was going to break out, breaking above the 200-day moving average yesterday, back below that today, but we will take a look at those charts. So let's jump in. I'll share my screen. And we're going to cover bitcoinandmarkets.com first. Today, this is the one I put out just today, and it's the Bitcoin Minute Crypto Gaslighting in Congress. I kind of debated whether to actually even publish this one, to write it and publish it, because, as the contrarian Bitcoiner, as the rebel Bitcoiner here on Bitcoin and Markets, this puts me in stark opposition to many people in Bitcoin. And so it's definitely an unpopular opinion, but let's get into it here. If you guys didn't see, we had Gary Gensler in Congress yesterday testifying in front of the House Financial Services Committee. Clips were all over X. And of course, a lot of people jump on the bandwagon, especially those crypto folks that have been waiting to pump their bags forever and ever. They're all over it, whether they're bot accounts, or the XRP army or whatever the case is. They were out there definitely pumping and ripping and grilling Gary Gensler. Overall, I say it was a clown show. It was, in my opinion, an opportunity for representatives to get a soundbite chastising the chairman, because they're told out there that Bitcoin or crypto is such a big thing and it's going to help Trump get elected, and they think it's going to help them get elected. We know that there is funny business going on between crypto, not Bitcoin specifically, but crypto and politicians. We found that out in FTX. And so this just looked like a bunch of people trying to get one over on the chairman. I say, however, things are not as they are being portrayed by the crypto promoters. And you can check out the full video. I think I shared one clip on Telegram. I might share another clip on Telegram. But this is the full live stream, so you got to go through it to find these different clips. All right, so as a disclaimer, I just want to say I am a hardcore Bitcoiner and free market advocate. I do not if we could take away the SEC, that might be the best option. But we have the SEC. That's part of our reality. And so we have to deal with the reality that we are given. And so that's where I'm kind of coming at this from. I don't wish for the SEC to intervene in the market any more than I wish for non-governmental agencies or entities, these scammers, to commit massive fraud on the public. So which is worse? The Fed trying to stop fraud or the actual guys committing the fraud? That being said, the support for the crypto industry by members of Congress is badly misplaced. Oh my gosh, a Bitcoiner is saying that support by Congress is badly misplaced. Yes, it is. I think they will inevitably support Bitcoin, just like Trump will inevitably support Bitcoin. Everybody will inevitably support Bitcoin. But these people are pushing the crypto industry. Okay. They are essentially promoting fraud. And I would strongly recommend careful consideration of a Bitcoin only stance. I cannot stress this enough. The politicians grilling Gensler, not letting him answer a question, not really in search of information or truth, are perhaps more dangerous than a rogue SEC chairman. Politicians are very susceptible to the deep pockets of the crypto scammers. FTX revealed that. They receive campaign contributions and a willing audience on X of victims of these frauds that will cheer this kind of action in desperation. So there's a whole peanut gallery out there that think this is good. They think that the evil SEC is holding them down, but really it's the fraud behind everything that's holding them down. And the rug pulls by the crypto scammers. Crypto is a space built on fraud. Only Bitcoin is legitimately a decentralized entity and not a security. It does what it promises and claims. That is all. Everything else claims affinity to Bitcoin. So everything, starts by we're like Bitcoin, but we're better. We're better than Bitcoin. Bitcoin is old news. We are the new news. Everything is comparing and contrasting themselves to Bitcoin. They are claiming affinity to Bitcoin to pull off this scam. If Bitcoin failed because the technology failed, all these things would fail as well. So this Bitcoin is the fundamental behind all of these things. Bitcoin needs they need Bitcoin to legitimize the concepts as a whole, and they use false technical and financial claims to sucker investors. Now, there are some efforts out there that aren't complete fraud, like intended fraud, because I think for fraud, legally, you have to intend to mislead somebody. But all of these things are misleading. Even if the founders firmly believe in that they can deliver on their claims, they're not going to be able to. So they're saying false claims even though they don't know they're false. But is it fraud? Maybe that's not fraud, but it's built off false claims and lies. So, okay, let's get into the Howey test, because this is what it's all about. The Howey test applied to Bitcoin. And I just found a pretty decent website, findlaw.com. Seemed like a pretty legitimate site. And this is what it says about the Howey test. Courts use the Howey test to determine whether certain transactions qualify as investment contracts. So buying a token, is that an investment contract? If so, the Securities Act of 1933 and the Securities Exchange Act of 1934 apply to those transactions. Securities are subject to certain disclosures and registration requirements. So notice this is the Howey test is used by courts. It's the courts that use the Howey test, and it's a Supreme Court standard, and the SEC has to enforce it. That's what they have to enforce. However, it is the crypto promoters who refuse to be subject to the test. So everybody's subject to the test. You pass or fail. Are you security or not security? The thing is, when you apply this to crypto scams, they fail the test. They are securities. But then they cry, "Oh no, we aren't subject to this test." Of course you are. Everyone is. Attempting to gaslight and deceive the regulators in order to continue spinning their fraudulent schemes. So you hear things like, this is a new industry, this is new technology. You can't apply old laws to the new stuff. Of course you can. There could be maybe slight details that need to be worked out, but these are very broad concepts, very broad rules, and they apply just as well to crypto as to everything else. It's just that they are trying to gaslight, like Brian Armstrong, Coinbase, Ethereum folks, XRP, all of these people out there. They just, if they claim loud enough and hard enough and long enough that they aren't subject to this test, then somehow they hope that they won't be subject to this test. That's the state of the affairs right now. And it seems to be working because they've got all of these politicians on their side helping them to gaslight the public in congressional hearings. The test has 4 parts that must be met, okay, for it to be considered a security. It is an investment of money. And there have been other like clarifications of what money is. It doesn't have to be necessarily money. It can be like in-kind investments. Um, but there has to be an investment of some sort where you expect profit. So you're not buying a consumable. You're buying something expecting a profit. So let's say I am buying any sort of token out there. We won't consider NFTs for the time being, but we could talk about that if you guys have questions. Oh, by the way, I'm live streaming on YouTube, Rumble, Twitter, and Telegram. Put your comments down below. This will be a relatively short stream, hopefully, and I can get to your questions near the end. But here we go. So it is investment expecting profits. Why would you buy a token if you don't expect it to go up? This is one of these things. Like, we have said this about Bitcoin for a long time. If you don't buy Bitcoin, you just want to wait and see. Okay, there's an opportunity cost. If you buy Bitcoin and you hold it and it doesn't work out and it goes down by 5% a year for 10 years, the incentive to hold it, there is no incentive to hold it. It doesn't work anymore. You have to hold it expecting a profit. That's the only reason to hold it. That's the only real reason to buy it, is because you expect a profit in the first place. So the investment of money is in a common enterprise. So there is some central party. There's some goal here in mind, like World Computer. Code is law. Any sorts of these things. It's a common enterprise. So this network, the founders, the network, the people, they are all in this common enterprise going towards a goal, either with a business plan or something like that, right? Development roadmap is just like a business plan. So it is a investment expecting profits, including a roadmap or business plan. And any profit that comes from the efforts, of promoters or a third party. So if this is kind of the tricky one, because does like Ethereum have a promoter? Yeah, it does. It has Vitalik. It has, what is it? Is it Joseph Lubin? Is that his name? Jeremy Lubin, Joseph Lubin, I think. They have central promoters, they have insiders, they have third parties all over the place for all of these tokens. Early VCs that pump it, that pump and dump scams. You have to have a promoter for these things to be a security, and it most definitely is a security for all of these things. They all have a central party, a central promoter that is doing the code, running the code, maintaining the nodes, fixing the bugs when they happen. All of these, this central party, those are the efforts of the promoter. So all of these things, yes, they all apply to crypto projects, all four. Bing, 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 bing. It is a security. So I just kind of spell that out here. Okay, crypto tokens meet all four criteria, yet promoters will claim Howey shouldn't apply to them. Why? Because they would then have to comply with the securities disclosure requirements. We'd see insiders, we'd see partners, business management, and audit, etc. They would essentially have to admit they are not decentralized and therefore could no longer claim to be. Why is decentralization so critical? Because if you are not decentralized, or if your network is not decentralized, there is no reason to use this particular technology. Centralized architecture would be better. Investors would be suckered into these dubious claims unless they were sold. Investors would not be suckered into these dubious claims unless they were sold under false narratives that this technology somehow makes these promises both exciting and profitable, but they don't. It's just that you can add a token to it. You can make a promise and add a token. That token is a security. Those securities are regulated. Okay. It perfectly fits together. So where does this leave us? I will restate the very important point. Politicians promoting crypto scams instead of Bitcoin only is a danger to citizens. Oh my God. Is as dangerous to citizens as a rogue SEC chairman. An analogy might be if politicians were promoting rigged casinos and grilling the regulator who is trying to get the casinos to at least not cheat the players. The crypto projects should simply comply with the Supreme Court's Howey test and register as securities. Don't let them gaslight you into thinking a new standard is needed for them. That effectively concedes that they are subject to Howey. So if they say, oh, this doesn't apply to us, well, they're kind of conceding that it would be a positive, it would apply to them, but they're just saying it doesn't. Uh, this is completely different with Bitcoin. There is no one to comply. I'm not calling for a ban on crypto. I'm not even saying the SEC is great. I'm not being a statist by saying this. I say let them flourish, but the public deserves some enforceable honesty via securities disclosures. So, again, the perfect world might be no SEC, but we have an SEC. So, it's kind of the worst possible outcome for people to undermine the SEC and to promote scams, or for the SEC to be forced to legitimate the scams. That's the worst of all worlds in this case. So anyway, that was that post. Probably won't get me any friends in Bitcoin, but whatever. This one is the macro minute, went out yesterday. How the 5-year forward and break evens reveal transitory inflation and signal looming recession through market inversions. And we just went through this here. So 5-year forward is considered one of the most reliable indicators for inflation expectations. Important to note, this refers to expectations of money printing, not necessarily CPI. This metric in particular helped me predict that inflation would be transitory, or quote unquote inflation, because after the COVID crash, it never reached significant levels. Even the moderate CPI years after the global financial crisis were higher. Therefore, there wasn't enough money printing to sustain higher prices in the last couple of years, and the economy would inevitably slide into recession and to lower prices again. So you can see the 5-year forward over here post-COVID. It did not get back up. Oh man, let me try to make this fit. I don't know if I can make this fit in here better. Hold on a second. I'm just going to go to this one. All right. So you can see it didn't even get as high over here as it was post GFC. And this was not a high CPI period. Yeah. So the future inflation and growth expectations never really broke 2.5%. So that's how we can know that it was transitory here. Just to clarify, the 5-year forward measures the market's expectations for inflation starting 5 years from today and continuing out to 10 years. All right, break evens. Break evens measure something slightly different, but they are still among the best gauges of inflation, i.e., money printing. The break even inflation rate represents a measure of expected inflation derived from comparing regular treasuries to inflation protected treasuries of the same duration. So here we go. Red is 10-year, blue is 5-year. You can see here after a great financial crisis, 5 was under the 10, so that is normal. But then we didn't actually invert here. They were equal on couple of these data points, but they never actually inverted. We inverted here in 2021, and there was quite an inversion going on. We also inverted a little bit back here, and I actually have a chart with some arrows. So you can see these two periods of inversion. So as you can see above, the normal behavior, blah, blah, blah. However, inversion. Okay. Post-COVID crash. The post-COVID crash behavior was particularly notable, with the break-evens rapidly inverting and sustaining that inversion for 2 years. This should have signaled that something was seriously wrong in the economy and that the recovery was hiding a future downturn. Indeed, this confirmed my transitory CPI call and interpretation of the 5-year forward above. I also added the Fed funds rate to the chart below and focused on the period leading up to the great financial crisis. While I would have liked to use the policy rate, blah, blah, blah. Okay, yeah, I couldn't use the Fed funds policy range. I had to use the effective rate because it didn't go back this far on Fred for some reason. But okay, so you can see right before the great financial crisis, we did have a period of about 2 years right here of inversion. Okay. Then we had a period where it kind of was sloping downward. And what does sloping downward mean? That would be I talked about it here. Okay, gently declining. The market slowly realized the downturn was ahead. So again, this is the break-even rate between the 5-year tips or between the regular constant maturity and the tips version. And as these rates are going down, as rates fall, the market is telling you money's getting tight. We're going towards recession. So there was an inversion, uninversion, slightly going downward. Then the Fed cut rates. See right here at the end of 2007. That is just like today, by the way, just like today. And if we go back up here to this one, you can see 2 years of inversion, period, uninversion, kind of another uninversion here. And if I put the Fed rates in here right now, the Fed policy, you would see this was the first rate cut here as well. So it very much rhymes with back over here, pretty much the exact same behavior going into the great financial crisis on the break evens. All right. I can't help but notice the parallels between the pre-GFC and today. They had 2 years of version. Okay. History doesn't repeat, but it does rhyme. This is yet another indicator signaling a coming recession. It also highlights the disconnect between what most people call inflation and actual inflation, i.e., money printing. Despite all of the stimulus post GFC, and particularly after COVID, the economy has not recovered or restarted normal credit-based monetary functioning. That should have been bolded because that's the important sentence. So, all right. That was that. Let me take a look at comments here. Dex Invictus, what's up? Yes, that is a great observation, BTCP. As Bitcoin grows, the crypto scams get more sophisticated. And it's also as each generation of scam gets exposed. So, like ICOs are so obviously securities now, they don't work really anymore. So yeah, they have to evolve and get more and more complicated. Yeah, I agree with that. Dex Invictus asked if the 10-year is going back above 4%. That's a good question. Let's jump into the charts. Keep this on moving ahead here. And I'm going to go back to this view. Let's see if I can make this a little bigger somehow. How come that is not expanding? It's cutting off a lot of my screen for some reason. And I do not know why. So I'm going to go back to this view. Okay, so this is Bitcoin. Let's go to the US 10-year because Dex asked about that. This is, let me hide these oranges and arrows. All right. So the Fed cut right down here at the bottom, basically. And a lot of people are surprised that the 10-year is going higher. What? The Fed is cutting rates, but the 10-year is going higher? The other rates are probably going higher as well. But people are surprised by this. But it's not a surprise. It shouldn't be a surprise because at when the Fed cuts. Okay, wait. Sorry, let me start over. The 10-year rate is based off of future growth and inflation expectations. And so a cut, what does a cut typically mean? Right off the bat, what would people think a cut is? It's stimulatory, right? And so the market is going to give the Fed a chance. Is this going to work? Maybe this will work. Maybe the Fed is actually on top of things. Maybe they will get this figured out this time. And so that's why I drew these lines, or these kind of very bad illustrations, because they were going to react like this, giving you some hope, but then it's going to sink in. Oh no, the Fed is behind. The Fed does just follow the market. The Fed is not on top of everything. Boom, rates will fall back down again. So this is exactly as predicted, actually, really close to this orange line that I drew. Let's see, I would have drawn that back prior to the FOMC, because it looks like I might have drawn it on the 12th, or let's see, Friday, maybe that was the 13th. So that was after the Fed. But anyway, yeah, I drew this, and it's right on line. This is exactly what the market does. They're fooled right now by the Fed a little bit, but the Fed is not in charge. They're going to figure that out, and it's going to come back down. So can it get to 4%? That would be way up here. It's possible. I would put it at, a minority chance, 25% maybe, that it makes it to 4%. I think it turns around before that, but we'll have to wait and see. Dex says short end came down pretty good so far. All right, well, let's take a look at the short end real quick. I'll just type it in here. And I have to be watching the clock because I have soccer practice tonight. Okay. Yeah, it is not doing what the US 10-year is doing. It's more anchored towards the short end. And so, yeah, it continues to come down. That's interesting. So that is a bull steepener, which is actually bearish. I don't know why they swapped those, but that's a bull steepener, which is bearish. Okay, let's take a look at a few other things. The dollar was an interesting story today. So if we zoom in on the dollar, we can see that yesterday was a pretty big sell-off, pretty low close down here at about, where did it close? 100.35. Opened down. You can see the bottom of this candle opened down a little bit more even, and then recovered this whole thing today. So that's an interesting move with the dollar. Again, I'm not expecting severe dollar weakness. Maybe at the beginning of a recession. Are we there yet? We might not be quite there, ready for a recession yet. It might be not until the end of the year that we kind of are hitting recession. So, but I'm not expecting big time sell off in the dollar. I mean, the difference between like my thesis and say just the consensus Bitcoin thesis, or even the consensus macro thesis out there, is people think the dollar is dying. The dollar is not dying, okay? The eventual trajectory for the dollar is higher. Every move lower is temporary. It's due to just short-term shortages, short-term swings in the market, and the eventual path is going to be higher because we're in deflationary times. So that's that. Let's go to gold. Gold made another higher high today, coming back a little bit flat on the day, really making a big push here. Bitcoin should follow gold. It followed gold back in 2019, 2020. Should follow gold here as well. This is a very big, strong move for gold. I'm happy for the gold bugs. I don't have anything necessarily against them other than they should see the light and buy Bitcoin. So, yeah, this is a good move for gold. What we expect, I mean, we should expect gold to do well in these times going into recession as people flee for safety. So we took a look at the dollar, gold, the US 10-year. How about oil? Oil could not break above that resistance that we were talking about last time. So it was down on the day. I did see that Cushing, Oklahoma inventories were very low, and that's actually a bad sign for the oil price. We've talked about this before, that inventories and price are symptoms. So the inventory really does not affect the price at all. The only time I would say the inventories affect price is if they're full and you're trying to get rid of some longs and no one's willing to buy them because no one has any place to store them to actually take delivery. So people usually take delivery and they store it at these storage facilities. Well, if these storage facilities are all full, they have no place to store it. They cannot hold that long to maturity. They have to sell it. So that is when inventories might affect that. But in this case, when inventories are low, it doesn't have anything to do with the price. It's actually kind of the same symptom. So price is falling because demand is falling. And well, I wrote a whole piece about it. I should look it up. Let's do that. How many minutes am I at? Okay, let's see if I can find this real quick. We've talked about it here before on the show. But if you chart it out, low inventories always correspond with highs in the oil price, not lows. I'll have to find that and talk about that on another stream. Okay, let's continue to the S&P 500. Kind of down on the day. Again, boring at the top here, waiting for something to move. Are we going to go higher? Was this just a fake out and we're going back down? Or are we going to continue up? So is this a fake out and we come back down? Or is this something like we're just going to, like kind of what Bitcoin's experiencing right now, and we go up from here? So the market is kind of in a holding pattern right now. All right, so that is all I have. Let me go back to Bitcoin, and then I can take a look at comments. No other comments. Let me check Telegram for comments, and then we're going to bounce. I have a busy evening. I also live in Florida, not where the hurricane is coming ashore right now, but they've canceled school tomorrow, and so there's a few other things. Busy evening for me tonight. But okay, guys, that's where I'm going to leave it for today. Thanks for joining me. My name is Ansel Linder, Bitcoin to Markets. Check out bitcointomarkets.com. If you're on YouTube, Rumble, like, comment, subscribe. I try to get to all the comments later on those platforms. So appreciate you guys for putting those down there. And that's going to do it. See you on the next one. Bye.